What a ridiculous, sideways, choppy, crazy day today. This is exactly why right now swing trading is very, very difficult. And look, you could have went long in the open. You could have thought, oh my God, look, the market is skyrocketing right now. As soon as you would have bought, the market. All right, 1 second. Before we continue, we're going to go over the SPY, the QQQ, the IWM, lots of cryptos. We're going to go over the dollar and crude oil. All right, so let's get right into it. All right, so here are the SPY's levels. All right, so we crossed above 420.54 periodically, but all throughout the open until 12 o'clock, every single major indice just started to vomit. All right, we can see that it started to fall. It rejected 420.54. It fell through 418.25, and then obviously it bounced off of this lower support level right here at April 27th at 10:15, which is the low at 416.32. So that held as support. Okay. Then we bounced right back above, held above 418.25 once more, and then closed much higher again into, all-time highs. So, this was a really, really crazy choppy day. If you went long right here at the open, you would have lost a lot of your money. If you went short right here at the lows, you would have also lost a lot of money. But you have to wait for clean breaks from support and resistance levels. Essentially, as you break through a prior resistance is support. So it's like you could have just waited. They traded this on the way down. That was a clear-cut level of support that you could have shorted against. You would have made a lot of money, and then you could have waited for it once more on the way up. All right, so that was clear cut. These levels were really, really nice on the SPY today. So these same levels really need to hold. The new resistance is going to be at 420.71, which is today's high. 418.25 and then 416.32 are going to be the support levels. If we look at the SPX on a daily chart, the SPX on a daily chart looks very, very bullish. We're still oversold, making a new all-time high. So that is extremely bullish for the SPX. We could see that it bounced off of this trend line perfectly. And the B bands are starting to tighten up. And we bounced off of the 10 simple moving average on the SPX. So that is very, very bullish. Let's look at the SPY on a daily chart. Looks okay. Right there. It looks very, very bullish as well. New all-time high. Oversold on the MACD, which means that there is lots of more room to go. Overall, looks very, very good. The new resistance level, like the main resistance level, is going to be this trend line here. If we can get there around 422, 422.80 or 423, that is going to be another key level of resistance. But yeah, to cross back above that and trade above that, that would just be parabolic. So we need to see if that happens once more. All in all, very, very bullish. Look at where the SPY is trading. We're trading at above 420. All right, we were trading at around 400 at the beginning of this month, and no one thought that this move was going to sustain itself. It did. It evened itself out, and it's starting to cross back up even more. So we have to watch these things with a completely unbiased view. And yeah, that's the analysis on the SPY for today. On the Nasdaq, the levels looked a bit more clean. There you go. All right, so the resistance that I had was at 340.76. Obvious. Oh, 342.14. Crossed above it. But we failed to stay above it. We fell below until 12 o'clock, essentially, right? So we fell through 340.76. And look, man, you could have shorted against that level again, and you would have made a lot of money. And then, or you could have waited to short 339.33, which we also broke. You would have made a lot of money again. And then 338.22 was another level of support. Could have shorted there. And then it bounced on the way back up. Okay, so like I said, when there is a huge downward move, and we are falling like vehemently, right? Usually what happens is we end up testing to at least the 38.2% Fibonacci level. So on this huge downward move from 342 79 all the way to 336.93. Once you saw this bouncing, you could have drawn a Fibonacci retracement, and you could have seen, okay, at least technically the worst case scenario that we're going to bounce back to, and this usually always happens, okay? Unless we continued falling downward. But if we start moving upward, the minimum bounce back level is the 38.2% Fibonacci level, and that would have been at 339.17. 339.17. Okay? So obviously we can see that it bounced much higher than 339.17. It rejected the 61.8% Fibonacci level, which is also confluent with the 340.76 level that I have drawn out here. Okay, so that, really worked out pretty perfectly. And now it's bouncing off of the 339.86 level, which is the 50% Fibonacci level, which is very bullish still. So we need to see if these levels really hold at 339.33. We need to see if 340.76 crosses back above. Let me look at the NDX and the Qs on a daily chart. All right, so this obviously doesn't look as bullish as the SPY. We did make a new all-time high today as well, but we are extremely oversold on the MACD. We've been absolutely skyrocketing for the past month, and it only makes sense that it starts to teeter. Okay, there hasn't really been a large period of consolidation, and this is it. So we need to see how we respond here, and if these levels hold, which I think that they might. But we have to take into consideration that there is so much profit made in the Nasdaq sector that people need to take profits out. And hedge funds and institutions and 50-50 funds, they take money out of their winning indices and winning plays and put them into laggers. So they put it into stocks that haven't been doing well because they chase P&L each month. So that's what I think could happen. We could see an end of the month rebalancing into weaker stocks. So, since it's the end of April, we could see a rebalance out of the Nasdaq potentially for tomorrow into next week, early next week. So let's see if that actually happens. So these are the levels for the Qs. The Qs are oversold, somewhat at support. In a bullish pattern regardless. Let's look at the NDX. NDX is trading still above this January 1999 level. Very oversold on the MACD. Still looks pretty good. And overall, the stock market still looks very, very bullish. So yeah, there's the Nasdaq. So here is the IWM on a daily chart. It looks very overbought at resistance. So this doesn't look too good, but it's weird because the IWM is actually the lagging indice currently. And the reason for that is because most of the money has been going into the tech sector. And because prior, essentially, since, October, the IWM has been the clear outperformer. And then, just recently, the Nasdaq began to pop off once more. All right, so now let's check it out on a 15-minute chart. So the IWM, it also, I redrew this trend line because TradingView has been giving me a lot of bugs. So I have multiple trend lines and they just vanish for some reason. So I'm also going to make a video soon. I'm going to draw completely blank charts and I'm going to rechart them from scratch. So not only is that going to help you guys, it's also going to help me so that I have like a documented place of all of these trend lines that I have. So the resistance levels that I had for the IWM, obviously, like it opened above all of them. And then 231.03 to 232 essentially was going to be a key level of resistance for the IWM. We never broke above it. We rejected this trend line, and then we fell through this trend line here So, and then also, I mean, if you just look at the levels purely, right? We fell through 229.50. Okay. Once we fell through 229.50, you could have also went short, and you would have made a lot of money. Then the next level of resistance that would need to have broken was 229.17. That was acting as a support level, obviously, because when we're coming on the way down, prior resistance is support. So all of these levels ended up becoming support. And, you know, if you didn't want to go short here, you could have waited to go short as we broke this level. And yeah, if you did that, that would have worked out very, very well for you. Because then afterward, we ended up breaking the 228.07 level as well, which was absolutely fantastic. And we bounced off of the lows here today at 225.79. So if we look at the Fibonacci here, we can see that, you know, obviously, regardless of how weak an indice was, regardless of anything really, we always tend to retest the 38.2% Fibonacci level. If we are bouncing, right, and if this is a confirmed bounce, bullish engulfing pattern here, we, you know, we're reversing sharply. We fell sharply, but now we're reversing. We always tend to at least touch the 38.2% Fibonacci level. So that is always something that you guys should keep in your back pocket. And it's very interesting because we closed exactly at, you know, resistance essentially at 228.07. So that's, you know, that's pretty interesting. And then obviously, you know, we completely failed to break back above the 50% Fibonacci level at 228.33. So, you know, these things are pretty important to take into consideration. And these are the levels for the IWM. Let's go ahead and look at the IWM, the RUT on a daily chart. All right, so the RUT is extremely overbought, failed at resistance here. You know, it's trading below 230.04, 223.04, and this needs to cross above. Initially, I had, you know, a bull flag, which is a bullish pattern. I thought that we could, you know, retest all the way up here to this March 2009 level, but you know, we are extremely overbought now. We need to cool down. So essentially, this needs to cool down a bit. So we need to, you know, maybe fall back down to support potentially, or consolidate a bit, and then, you know, continue on higher. Because when something is this overbought already, that means that there isn't as much room to the upside, unless there is a rebalancing into this sector from hedge funds and banks. But that's why we just look at these levels blindly. So we are trading against the 78.6% fib level at 23.0455 on the RUT. So let's just keep on watching that level. The dollar doesn't look like it was doing much. It still looks very, very bearish. We can see that it crossed above on the MACD, but it's still falling, which is a very, very bearish signal. You know, the still the same level of resistance remains, 91.373. Yeah, and we're just gonna continue to monitor that. So I actually, you know, I see a level of support forming here essentially for the dollar. If we can bounce off of this, so this level is going to be very important, this trend line. So let's see if we can hold this trend line, or if it breaks down below. So that can be a nice little keying. That can be a nice little area to see whether or not, you know, are we really bullish or bearish. If we bounce off of this and then cross above this, that's bullish. But if we fall, that would be very, very devastating for the dollar. And hopefully it will be very, very good for the overall equities and stock market. US 10-year yield had a very, very green day today. It's been popping off for the past few days. Today it was up over 2%. It had a high of 1.68, and it ended up closing at 1.64. So the US 10-year yield, you know, if we can start bouncing back, that'll be very detrimental, maybe potentially, for the for growth stocks and the Nasdaq. But we can see we are overbought on the MACD, and this level, you know, it needs to simmer down a bit. And once it simmers down, then we can, you know, consolidate a bit here with an US 10-year yield, and then show a upward move, but we're just going to continue monitoring it. Also, Amazon reported amazing earnings. It's up over $100 in the after hours. So let's see if that affects the overall market tomorrow as well. Now that earnings season is essentially over for like the larger stocks, I think tomorrow and then especially into Monday, things are going to start going back to normal, because this entire week the volume hasn't really been there. People have just been waiting for earnings seasons to end. All right, so now that it's over, and tomorrow is really the last day of earnings for this week. Let's see if the market can start acting normal again. Let's look at the price of the stock currently. Yeah, it's up $112 after hours. Twitter reported earnings as well, but it started to plunge. So Twitter didn't report very good earnings. So obviously it's not going to have as big of an impact on the market as Amazon, but Twitter is reported bad earnings. It could mean that the company isn't doing well, and the guidance. Yeah, exactly. The guidance didn't do well. So yeah, there's that. Now let's check out Bitcoin, Ethereum, Litecoin, and these other freaking amazing cryptocurrencies. So this is Bitcoin. As we can see, it failed to hold 5383. And it failed to cross above 55,900. And as we fell below 53,830, now, the reason for it is because we need to consolidate a bit here. The MACD was just so overbought. It was extremely overbought at resistance. Okay, so it just makes sense that we are going to have a pullback. I think we have somewhat of a pullback to at least 51,500, or to this trend, or to this this level here at 51,200. But again, you have to keep an open mind. This can fall and completely break this trend line here. Okay, zooming out, not even thinking that we're going to start and make new all-time highs again on Bitcoin. The fact that we made up again this 38.2% fib level retracement, we made that money. I alerted it on Twitter to go long with a support level at 46.5 to 47,000. All right, so we made that money. It ended up touching the 50% fib level, but that failed. So now if this breaks, it could potentially break way lower. And yeah, just be very, very careful. But I personally think that the one of the most important levels is going to be the 51,200 level. 51,200 to 51,500 are going to be very, very important on Bitcoin. It just needs to give enough time for Bitcoin's MACD to cool off a bit. As you can see, it's just very overbought. So we need to see if it can hold those levels, and the MACD can even out and stop being crazy. But then Ethereum, you can see Ethereum is it made a new all-time high again today, and it's doing very, very well. But again, look how overbought this MACD now is. All right, so this is the most overbought it's been in quite some time. But the last time it was this overbought was back in January. We did make a retracement back to the 20 exponential moving average. But then we continued on higher. So every single time really that it has been this overextended, we've just been continuing on higher. So just be careful for a pullback. Okay, don't put all of your money when a crypto is at its all-time highs. All right, it makes no sense to do that, especially now that the MACD is much more overbought than Bitcoin. But it is a very, very, very good sign that Ethereum is trading at new all-time highs when Bitcoin is trading at swing lows, really. All right, so now the fact that Ethereum is doing that, all of the money that can potentially fall out of Ethereum can potentially go into Bitcoin. But right now, it seems like it's altcoin season. So yeah, just be careful with your money. What I tell all of my friends to do, this isn't financial advice, is just dollar cost average. If you're not willing to trade it, if you have money laying around, just throw in some money each week into, you know, your favorite cryptos and just hold them. Like, don't even bother looking at them. Just hold them and see what happens. And it has to be money that you're willing to lose. And yeah, that's basically the advice that I give my friends. But yeah, that's not financial advice. I also really like Litecoin. Litecoin, I feel like it, you know, there's huge support at around 248. If 248 can hold, then that would be very, very good. But, you know, obviously, same exact thing applies to Bitcoin, Ethereum, Bitcoin, right? Um, it needs to hold these key like 23.6% fib level. Well, the Bitcoin's 23.6% fib level was 51,200. This is 237. All right. So now if Bitcoin falls down to that, then Litecoin can potentially fall as well. Um, but yeah, it isn't as overbought on the MACD. But you know, it failed to really make a substantial move, and it failed at the 50%. It didn't even touch the 50% fib level. It is trading below the 38.2% fib level now. So yeah, that's one of the coins that I tell my friends to dollar cost average into. Again, it's not financial advice. I've just been following Litecoin since, you know, the most money I've made trading early on before I made any money on stocks was from crypto and just trading crypto before getting taxed. So yeah, that worked out really well. I was monitoring Litecoin. Litecoin actually brought the crypto markets back into the bull market. If you go and look back at 2018, Litecoin was actually leading the charge. And then once Litecoin, you know, started moving forward, that's when Bitcoin started to cross above 3,400. And I was in Bitcoin. I told all of my friends to get into Bitcoin back in 2018 as well. Early 2018. I was watching it back in like December 2017, March or January 2018. So yeah, those were the times when like Litecoin was trading around like 20, 30, $40. Um yeah, so that's really what I'm watching right now on Litecoin. So XLM, pretty similar. We can see that it's more overbought. It needs to hold above 46 cents. It failed at 50 cents. So yeah, we just need to see how Bitcoin and Ethereum are really doing. With these other, you know, altcoins, I'm just throwing some money into them and holding them for longer term. And it's only money that I'm worth you know, not expecting to use. So again, it's not financial advice, but that's what I tell my friends and that's what I've been doing as well. But yeah, that's basically my analysis for the day. If you guys enjoyed it, drop a comment, drop a like, subscribe to the channel. I hope you guys enjoyed it. And let me know if you guys want me to do analysis on anything else. And have an amazing day. I'll see you guys tomorrow.